After the conflict, the future of the dollar, euro, and ruble. When the conflict between Russia and Ukraine comes to an end, the global monetary landscape could undergo significant transformations. The reduction in international uncertainty tends to reduce currency volatility, creating a more predictable environment for investors, businesses, and governments. Over the past few years, the impacts have been felt directly in energy prices, supply chains, and overall market confidence. As the situation stabilizes, these critical factors would begin to adjust, paving the way for a more balanced outlook. For energy exporting countries, such as Russia itself, significant adjustments will be made. The ruble could fluctuate in response to the normalization of demand and oil and gas prices. In Europe, the euro should benefit from the recovery in confidence, especially with the reduction of pressure on the economies most dependent on the energy sector. In emerging markets, which have been affected by trade instability and the investment slump, there is the possibility of a strengthening of their currencies. The gradual return of capital flows and the resumption of regular trade patterns could drive a new growth cycle. The US dollar, which played a safe haven role during the most tense period, could undergo adjustments. With other currencies regaining ground and with greater investment diversification, the dollar's exclusive role could give way to a new dynamic of equilibrium. This process also reflects a broader reconfiguration. Currencies are responding less to geopolitical risk and more to economic fundamentals. Factors such as competitiveness, trade balances, and inflation rates should once again have a decisive influence on investor valuations. In the long term, the impact will depend on the type of agreement reached, the speed of recovery of the economies involved, and how global supply chains are reorganized. But the trend is clear: overcoming the conflict paves the way for a more stable international monetary framework, less prone to shocks and more aligned with the structural foundations of the global economy.